tuning into the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Our goal is to help you improve your returns while keeping you up to date with everything that you need to know. What helps investors beat the market is information and knowledge of how to use it. We'll provide you with both. Before we get started, be sure that you subscribe and turn on your notifications because every time we drop a new episode, money is made. All right, guys. The stream is live. I'm gonna post it in the. I'm gonna post a link here on Clubhouse. You can listen on either end, whichever you choose to. But if you want to see the screen and you want to see what we're doing and what we're talking about, you can check us on Twitch TV. I put the link in the chat on Clubhouse. All right. What's going on, GA? I see you. Hola, Anisha. What's going on? What's going on, Corey? All right. And give me 1 second here. Let me I need to Rodney, you're on the Twitch, right? You got the Twitch, right? I think you already do.
Yeah, no, I don't think I have Twitch because I logged into it, but I think your version is a pay version, right?
No.
No?
You could watch it for free. There's no pay version.
Yeah, I logged on. I tried to watch the video the other day, but it was only like 30 seconds of it, so I'd assume it was a pay feature, but I have to I gotta go back and mess with it.
All right. Yeah, just click the link in the chat. Just click the link in the chat and should take you right on over there. What's up, Cecily? What's up, Zachary? What's going on, guys? I don't know. Somehow, some way, I feel like Clubhouse is glitching right now, Anisha. I don't know why. I got this feeling. We'll see. All righty then. All right. So, we're going to talk about certain specific strategies that you can utilize with the Pro Pivot Indicator. We're gonna have our little friend Gemini here working with us to help break down some of these strategies as well. Yesterday we made some we are going to be releasing the latest version today. So everything you see today, when we are done with this session, you'll get that version released. Okay. And that's pretty much going to be like a tradition on Saturdays, right? I'll come in, we'll talk trading strategies with the Pro Pivot Indicator, and then if there's a new version to go out, I'll post that new version. All right. Now, as you can see here, we got version 29. And yeah, so that's another thing as well. So, pretty much the versions will just go 1 point at a time from now on. So there won't be any more like 29.1 and 2 and 3 and so on and so forth. It'll pretty much be if any changes are made when that new version comes out, it'll just be 1 point up, right? We'll just be doing it like that from now on. So now, let's talk about any changes that you might see from version 28. The first is going to be right here. the daily bias. This is actually a very um it's actually a very special um calculation here. I came up with this calculation I think yesterday while we were on the stream, right? I just caught an idea, right? I just caught an idea, and I was like, you know what? Let's try this. And it really just, I don't know, man. Like just something about it. So first things first, let me show you the calculation for the ATR. Like y'all know me, I like to be transparent. And a big part of the reason why I like to be transparent with a lot of this stuff is because I feel like it helps people really like understand deeply what's happening, right? So what's the formula for the average true range, right? Right, watch this, right? So I'm gonna show you guys something. So you see here, right? You have the max between the current high minus the current low, right? The current high minus the previous close, and the current low minus the previous close. It has this thing blocking it here. But it's the current low minus the previous close, right? But notice they include the previous close, right? Now, if we take a look at what the pivot point formula is, right? It's the high, the low, and the close divided by 3, right? So what I decided to do was I created what I am going to be calling a regressive pivot point, right? So instead of the high, the low, and the close, we're going to take the components of the ATR instead. We're going to take the components of the average true range instead, and we're going to factor in the high, the low, and the previous close for our pivot points from now on. And that's how we're going to get our daily bias. Now, um, the reality here, right? The reality here is that we may have just created something that functions a lot better with the average true range as a way to map out key levels throughout the day, right? Not only that, so the one thing with the average true range that people may not know, what the purpose for this calculation is that it accounts for gaps. Okay, that's the purpose for that calculation. It accounts for gaps. It accounts for this. Okay, so that's the real purpose of the calculation. So you get to really say, okay, based on the fact that the market gapped up, what is now where should I have my bias set? So that goes now to the key point of the day, right? And you can see Tesla's daily bias was 438.52. Their high of the day. Let's go to Tesla real quick. Since I already had it open, right? So the high of the day was 438. Right, you can see they kind of had their struggles all day here, when it's all said and done. So 441 was the bullish key level. Their exit long was 448.56, right? 448.56. So, in this area right around here. All right, so once they pull back below this area, let's go right here, 448.56. Where's it at? All right, let's drop that there, and then we'll just put it down. All right, let's go to the 5-minute chart here, right? So you can see, so Tesla opens higher, pushes up, and then just kind of just slams right back down and closes strongly below that level at our key level here, all right? But our bullish key level was 441.65 in the grand scheme of things. Now that was our you know, you see our targets here on the bullish side was 444.77 and 447.89. These are all mapped out, right? So as you can see, when where do we open? We open it right around here. I mean, we push straight through those first two key levels there to the upside, right? You can see on the bearish side, you can see our key levels there as well. Now, the bias gets pulled down by the end of the day, so these levels are probably higher in that first 15 minutes of the day. But either way, so 438.52, you can see here, right? So right around this area right here, once we got below that, it was pretty much, just a sign that it was pretty much over with for Tesla on the day. It really wasn't much to look forward to as far as a recovery, right? And you can see it kind of sits like right at this point. Look what the market did when it got there, right? Right, the market kind of stalled out for a little bit when it got there, and then just boom, just dropped off from there. This ends up being, what we have 432.29, right? That was our right around our exit short level, our bearish key level 435.60. But if you're not getting back above 441.65, you still have right. So it actually, you get an opportunity to continue short here. And at that time, once you pop back above this level, it had you exit your shorts, and then it just stalled out there for the rest of the day. So we're going to talk about all this stuff. So pretty much your new daily bias is going to be accounting for gaps and ensuring that you map out your trades the right way. Your bullish key level is same as it was before, but it's going to start off. We're going to start things off pretty tight, and then we'll expand if necessary, right? So we're going to start off with these half standard deviation ranges. And we have that all around here, right? This is a half standard deviation range on both sides of the 20-period moving average. Okay. Your 8-day trend and your monthly trend are both half standard deviation ranges around the monthly and the weekly trend bias in order to determine whether or not you're starting to push away. So you can see right now with Tesla just blank on both sides, right? And you can see right here, 432.79 is your weekly bias, right? So with Tesla just kind of, blank on both sides here, your main issue, right? Your main issue here is numbers, daily targets. You're talking about these right here, right? Yeah, we're going to talk about those in a second. I got you. So pretty much when we're seeing this in gray, you're pretty much saying, okay, that means we're within a half standard deviation, right? And you can see we're right at those levels. You see it? All right, we're within a half standard deviation of these levels. So it's kind of just holding us there. Okay. So that's what, that's why these are just colorless at the moment, right? Because we're waiting for us to push in either direction and show that we have a bias to either side. Okay. So half standard deviations here. Your stop loss is going to be half it's half ATRs, half ATR from the high, half ATR from the low. So these are more clear breaks out of consolidation and things of that nature. So that's why we're using them, right? As a you know as a way to consider getting in and out of our positions, right? Now, I see a question that says, "What are the shades?" So, essentially, your weekly pivot, you're going to see these are going to have shades here, right? Your weekly pivot, whenever this is green, right? This means we're above the weekly pivot. Whenever it's red, it means we're below it, right? And the purpose of these shades is to make it very simple, quick, easy, right? So watch this, right? Here's how this helps. I'm gonna pull up just a random stock here. I think this might be Kellogg's or Kellanova. I'm just gonna pull up a random stock here, and immediately we're gonna know what the bias is on the week. Watch what happens, right? We're gonna know the bias on the week and the bias on the day. We're gonna know immediately. Here we go. Boom, right? Bullish bias. We know that immediately, right? Bullish bias, and they're setting a 20-day high. Okay, we got a bullish bias, right? And they're within range of their 20-day high. Okay, we know that immediately. That's what those are for. They're there for you to not have to think so hard. Because I think that's one of the biggest issues with trading, right? It just forces everybody to think so hard all the time, right? The Pro Pivot Indicator was designed to just alleviate you of some of all of that, like like I gotta think 24/7 what's going on, right? The Pro Pivot Indicator does away with a lot of that. Okay. Now here you see the high range. It's lit green. Now remember, so this is a half a standard deviation above the 20-day moving average. This is a half standard deviation below the 20-day moving average. Whenever we're in between these two levels, right? That's known as the consolidation range. It doesn't mean you're in consolidation yet. But that's the consolidation range. If you stay within this range for multiple days, yes, you are currently experiencing a consolidation. Okay? Multiple days being above this level and below this level, in between these two levels, means you're in the consolidation range. Okay? That's what that means. So whatever stock you watch on a normal basis, and this is why it's always good to have certain stocks that you watch on a normal basis so you can keep track of it, right? So like if I'm keeping track of Tesla, let's go back to Tesla. If I'm keeping track of Tesla, then you see this, right? Blank. See this? Blank. This means they're within the consolidation range, right? So let's say on Monday, they close out the same way. Let's say they close out the same way on Monday. That's beautiful because it means I know that Tesla is now consolidating over the past 2 days, at least over the past 2 days. Okay? So for that matter, if they then break out the top end, boom, right? You'll see this flash green like it was on K, right? I didn't bother looking at the name. I forgot to look at the name. Oh yeah, who was that? Let's go back real quick. Let's go back real quick. Who was that? So I can remember who it was. Okay, it was Kellanova. Okay. So yeah, so basically this will turn green like it was on Kellanova, right? So then if that happens, you're already green here. You already got your weekly pivot here. This is a daily bias. So, whatever got this green will likely take this into the green anyway, right? Because this is your daily bias, right? Let's say your 8-day trend, your monthly trend starts to click green as well. You can see how you're getting an expansion of your signals, right? That should be helping you understand that something on the bullish end is happening with Tesla again. But I said so again, if they were to stay in this range again on Monday, then on Tuesday, boom, we might have something, right? I'd probably take that trade right now. So that's one of the areas that we can talk about as far as like trading for the pro pivot indicator, right? Right now, I have my benchmark set to QQQ. All right, and you can see we're trading below the 8-day moving average as well. So these are other signals that you can look for right here. So you can see we're trading below the 8-day 8-day moving average also. Okay, so that's something else to think about here. All right, we're trading below the 8-day moving average. While our daily bias is negative, we'll see what our weekly pivots look like. As the market, gets ready to open on Monday, this should update, and we'll see if we're about to open above or below that weekly pivot. If we're about to open below it, that's a sign that we have about to open below it. That's a sign that we have just a little more confirmation, for the downside move. But you'd probably like to see us break below this low range here. All right, so 432.69 is the low range. Look at right here. Look at your weekly trend bias, 432.79. The one thing you're going to realize is a lot of these levels are going to line up. Right? A lot of these levels are going to line up. Right? And look, 433.29 right here, just a tad bit above it. Right? Let's say about 50 cents above your weekly bias here. Right? So again, you should be able to see some of the you know some of these key levels lining up with each other, and that should give you some additional confirmation, right? So a break of this level here is clearly going to be key, right? So you kind of just keep that in mind. If we're breaking out to the upside, right? We're already trading above our 8-week average. Do we get back above the 8-day average as that happens? All right. As you see how you have your extra confirmation. You already know what's going on. So as we break above this, we're looking now, do we break above this? All right. So let's see here. Okay, so you're talking about these numbers here. These are your weekly numbers. Every single week, you're gonna get an update. Now, I tend to focus on the market itself. Let's go with a SPY. Tend to focus on the market itself. All right. So the question in the chat was, what does the row of numbers mean next to the first, second, and third support and resistance numbers? So we're obviously talking about these numbers right here. All right. So weekly pivots. All right. Let's talk about pivot points here. So remember we talked about pivot points earlier, right? So your pivot point, this right here, this is known as your central pivot. All right. Central pivot. It's known as your central pivot. All right. We're not going to leave this here. I'm just pointing it out. It's known as your central pivot. All right. And essentially, it takes last week's numbers and creates projections. So the thing about pivot points is these are leading indicators. These are leading indicators. They help people understand where key levels are going to be week over week. Right. So they take last week's numbers, the high, the low, and the close, and it gives us our pivot points from there. Right. Now, those very same numbers, the high, the low, and the close, are used to calculate support and resistance levels for the current week as well. So last week's high, low, and close can be used to calculate support and resistance levels for this week. So everything we saw last week, Rodney, is what helps us to see what's going to happen this week. So your first resistance is no different than you have. So if I look at my chart, right? Let's say I'm looking at my chart right now. I still have Tesla up. Let's just you know, just move all this stuff over here real quick. Just get all this off the chart. All right. Let's just get rid of all this for a second here. Let's get rid of all this. Okay. So let's go to the daily chart here. Okay. So it's essentially, right, what we're looking at when it's all said and done, we're looking at these key levels here. So let's imagine I'm looking at my chart and I'm like, where's all my support and resistance at? Let's imagine that. I'm looking at my chart and I'm saying, where's all my support and resistance? All right. And I'm gonna use let's use a horizontal right here. So this particular day right here has some implications, right? I'm gonna there. All right, we're gonna say the high and low of this day, right? The high and low of this day we're gonna say is I'm sorry, hold up. The high and low of this day we're gonna say is is gonna be considered as support and resistance. We're gonna say the high and low of the previous week, we'll consider that to be some level of resistance. I'm on a weekly chart now, right? We're going to grab the high and low of the previous week. We'll consider those to be some levels of resistance there as well. So let's just use those. Let's just use those particular levels there for now, right? Let's go into the 15-minute chart. Let's see how the market responded to these levels. So as you can see, look at that, right? Look at the market as it responded. Now, hold on, give me a second here. Let me go back to the daily. So what day was that here? This was October 2nd. So anything, we can use the hourly chart here to keep it simple, right? You can see the market using these levels as support and resistance. Look at it. All right, look at that. You can see the market using these levels as support and resistance. You can see it all over the place. Look down here, right? Boom, we hit this level right here. Bounce, right? You can see the market using these levels. Look at this. Beautiful. Bounce, right? Resistance, drop, right? Look at this area right here where you also found some support, right? You pop back up here, stabilize right here, boom, you pop above, right? False breakout, you pull back, but you get the point. All right, look at all the times you use this as support and resistance, right? You finally break down from there, okay? And this is your October 2nd right here. So after October 2nd, you can see all the ways we use these levels so this is just standard support and resistance, right? That's all we're saying. It's just standard support and resistance. If I zoom in, you can probably see it being used even more, right? Look at that. Boom, little pop up from there. Okay. You can see look right here. Boom. Okay. Look at that. Boom. 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 All right. Boom. Look at them. Right here. False break, breakdown. False break, breakdown. Okay. You rallied up from here. Boom. Resistance immediately. What do? Boom. Immediately collapse from there. You back up. All right. So again, you get the point, right? So these get used. So these are just looking at it from a support and resistance perspective. Now, so when we say support and resistance, we're talking literally just support and resistance. But these levels are coming from the prior week, right? These levels are coming from the prior week. So the same way I grabbed the week's high and low and used those as support and resistance, we're using the week's high, low, and close. And there's formulas for that. And those formulas are, where are they at here? 1 second here. Those formulas are right here, right? So 2 times the pivot point minus the low, 2 times the pivot point minus the high. These create your support and resistance levels right there, that you can, these create your support and resistance levels that you're gonna, that you're gonna utilize. So that's one of the things that you gotta keep in mind. So every time a new week opens, right? Every time a new week opens, these levels here are going to be used, right, as support and resistance levels. Now, you don't have to have them on your chart. See what happens here, right? For one, you have your current price right here, right? Your key levels are right here. So every time you break above one of these levels, it's going to go bold, letting you know that you're getting further and further up the line, right? And I posted some videos the other day in the equity channel for pivot points, and it talked about one other strategy that I like, and that's focusing on your third point of support, right? Focusing on your third point of support here for your pivot points, right? And the suggestion was really like, hey, you would love to short a stock when it hits the third standard deviation. You would love that, but the reality is that the sorry about that. So yes, you would love to short a stock when it gets to that third. When it gets to that third support, come on. When it gets to that third support, third resistance, but oftentimes the stock is at an irrational point in that moment, right? So you know, um, you may not want to just immediately start shorting stocks when it hits these levels. You probably look for divergence on the RSI, that kind of stuff as you're hitting these higher levels. And then that'll give you some indication that, okay, we're hitting 689 on the SPY, and that's coinciding with, some key levels on the RSI that I have to watch out for, right? To the downside, though, however, when you're hitting third levels of support, this tends to be an easier trade to take because, the market is, currently in a state of looking for things to buy right now. If the market was looking for, if the market was in a more bearish state, then third resistance would be great to sell off of. If we were currently clearly on our way to entering a bear market, I was surely short as we hit resistance levels to the upside. Right. So just kind of going with what's happening, right? I have this the trend is up, right? Over the past 8 days and over the past month, right? The trend is up. So, for me, I'd look for pullbacks to buy, right? So as we hit resistance, right, look for maybe like a pullback that you can buy. So if let's say the SPY rally and hit 679 right now, right? Which let's go back to SPY real quick. Let's go to the daily chart. So I can just kind of get over there quickly. All right, there we go. All right, what did we hit yesterday? We hit 678.47, right? So in this regard, I'd probably be, maybe like on my 15-minute chart or something like that. And I'd probably be looking for for a pullback that I can buy here, and just kind of take that to the upside, you know. That's probably what I'd be looking for at this moment, you know. Look for a pullback that I can buy, and then that'll work. So that's where your other key levels on this side, because remember, past support becomes new resistance, right? Past resistance becomes new support, vice versa. So so that's going to be the case there. Math never looks so clean. GA says. Can we go over how to make decisions on resistance and support? Okay, so that's what I'm doing right now, right? And then you said versus deviation, so we'll talk about that. All right. So so pretty much, I can use a combination of my RSIs. You can see, boom, you see right here. See what's going on? So as I was pushing higher, right, I was hitting my head on the RSI here. So see 672.02. I may look for a pullback towards that area. And look where it happens to be. It happens to be right around the area that it gapped up from, right? Right around the area it gapped up from. So 672.02, boom. I said, okay, cool. I'm gonna look for us to pull back in this area, and then I'm gonna see what happens there. Right now, from there, I might, you know, I might look for us to get back above our bullish key level or whatever the case may be. Look for exit short signal just to say, hey, okay, now we're outside of that area that we want to be short in the market. So maybe we're starting to get back to this bullish trend that we've been seeing, right? So just some things right there. Look for us to stay above the daily bias when that happens, right? Again, the daily bias is going to be based off of previous day's close and things of that nature, right? So maybe on this pullback here, right? Boom, maybe you fall below the daily bias. That's just a daily bias, though. That's not an 8-day trend. That's not an 8-day trend. That's not a monthly trend. That's not a weekly trend, right? It's just their daily bias, which is great for considering what you want to do in the short term. But if I'm swing trading, right, then the reality is when it drops below that daily bias, I'm not going to look to short immediately simply because, right, I know my trend has been up. Okay. The reality is, right, I'm looking at a short-term bias right here, right? I'm looking at a medium-term bias right here, and I'm looking at a longer-term bias right here. You kind of look at it from that perspective, right? So short, medium, long. So if I get below the daily bias, then I'm going to start to look for us. So let's say we hit the bearish key level to the downside. Okay, cool. Show me a lower high first or something. Show me something because my previous trend is up. Right? So show me that we're really headed to the downside. Otherwise, I'm going to have to continue to lean towards looking for the long, long positions there. And that's how we find our patience sometimes, GA. Right? Like that's how we end up finding our patience sometimes. Like all those times where we're out here just dodging bullets. That's how we find that patience. Right? Because we're saying, nah, like, that doesn't look right in the moment. Right? Like the market is coming down and it looks like the most bearish thing that you could have ever seen. Right? That's what it looks like. But what is it really? And you have to start to distinguish from that, right? So right out the gate, let's start with the weekly pivot, right? And let's just simplify this whole thing. Let's just simplify it. From above the pivot, I'm bullish. From below the pivot, I'm bearish. Okay, now what's happening with my trends, 8-day and monthly, determines whether or not I'm bullish over the longer term or the shorter term, whether I'm bearish over the longer term or the shorter term, right? And I can build positions around that. So, for example, right? Let me explain something to you guys so that we're very clear about this. All right. And I need you guys to just like really like this is something I want you to just if you got to write it on a piece of paper, something, anything, right? Just listen to this very carefully. If the long-term trend is, and this is going to sound very strange when I say it the first time. I repeat, it's going to sound very strange when I say it the first time. So let me know if you need me to break it down, in any deeper way than I'm about to. Once I say it and I break it down the first time, all right. Let me know if it's hitting at home, right? So here's the deal. if the long-term trend is up, I will be bullish in the short term, bearish in the long term. Okay, y'all hearing that? If the long-term trend is up, then I should be bullish in the short term, bearish in the long term. Here's what I mean by that, right? What I mean by that is if the market is bullish, right? If we're in a bullish market, right? Then what's the most likely outcome tomorrow? This is what I want you guys to actually answer. Right? If the market is bullish right now, what's the most likely outcome tomorrow? Highest probability outcome.
Bullish.
Bullish. Right? GA says a pullback. No. So, okay. So, GA, we're talking about probabilities, not, right? We're talking about probabilities. Okay? So, I want you to think about that. So, it's like saying, what is the market likely to do? Right? What's the highest probability outcome if we're in a bull market? The highest probability outcome in a bull market is going up. The highest probability outcome in a bear market is going down. So what I'm saying to you is that means if I'm setting up a position right now, I'm setting up a position at this very minute. Okay? Then when I'm bullish, right, my shortest term position should be to the upside. That's what I'm saying. When I say setting up a position, I mean my options contracts, right? So, and this goes for UGA and anybody trading shares. This means, like, where do you put your biggest position at, right? So I may take a position, on the IWM or SPY or QQQ, right? I may take a long position there, right? And I would expect that to make money in the short term. Alongside that, I may buy some SQQs, which I would expect to lose money in the short term. But what do I expect the SQQs to do in the long term? I expect them to make money in the long term and lose money in the short term. Does that make sense, GA? I want to make sure you're catching on to that one. Okay, so let's talk about why. All right, that's good. That's good. Let's talk about why, right? The why is very simple. It's momentum. It's momentum. Believe it or not, Newton's law of motion plays a role in the market. Right? So things in motion tend to stay in motion. Right? So if I'm in a market that has the momentum to the upside, right? The market may tend to lean more towards moving to the upside in the short term. Right? Now, over the long term, what you're looking for are catalysts and shocks, because that's the only way to stop the momentum. Right? So if I roll, and let's talk about it like this: if I roll a bowling ball down a hill, hear me on this one, guys. If I roll a bowling ball down the hill, right, then matter of fact, watch this, right? I think I can work it out right here on the chart. All right, I think I can work it out right here on the chart. Let's move this out of the way for a second here. All right. So let's say I roll a bowling ball down this hill. Okay. I want you to imagine this level does not exist for now. Wait, let me put the 1 second here. Here's my bowling ball. Here's my bowling ball, y'all. All right. I roll this ball down the hill. Okay. Where we at here? There we go. All right. Roll this bowling ball down the hill. Okay. Based on what you see on this chart, where is this ball likely to stop? Based on what you see on this chart, where is this ball likely to stop? Or at least pause for a minute. Where?
At that support line.
672.17, yes?
Yes.
Okay. Now watch this. If I do this, what becomes your expectation?
The expectation at the support line.
Okay, hold on. Let me do it. Let me rewind. Did you see what I just notice what I just did?
Yes.
All right. So when that line is there, when that support level is there, you said your expectation is that it will stop at that line or pause at that line. Okay. When I do this, what becomes your expectation? When I do that, when I delete that level, what's your expectation now, Rodney?
No, sir.
There's no support. So your expectation for that bowling ball is what will it do?
Keep rolling.
It will keep rolling. Okay. So in a bull market, GA, listen to me very carefully, right? So in a bull market, it's like sending this ball downhill with nothing there to stop it, right? And catalysts and shocks come in, right? And they provide, right? They provide key levels where the market may pause, right? This right here is momentum. Okay? This right here is momentum. And the only thing that can stop momentum, right, are catalysts and shocks. Right? So, matter of fact, watch this. What is a melt up in stocks? Now, notice I didn't even mention the term melt up, right? I didn't even mention the term melt up while I was speaking, right? So I'm just going to see how they describe a melt up here. A melt up in stocks is a financial term that refers to a sustained and often unexpected sharp increase in the price of assets or asset class, such as the stock market. The key characteristic that distinguishes a melt-up from a normal bull market rally is that the dramatic surge in price is driven primarily by investor psychology, sentiment, and the fear of missing out, rather than by fundamental improvements in economic conditions or corporate earnings. All right, so here are some core concepts. Sentiment-driven. It's fueled by a stampede. That sounds like a word that you can relate to momentum, right, of investors who are afraid of missing out, right, on the rally. This is FOMO, leading to herd-like behavior. Detached from fundamentals, prices rise to levels that are often unsustainable and detached from the intrinsic value of underlying companies, leading to overvalued assets and high valuation metrics like price to earnings ratios. Does this sound like what we're going through right now, guys?
Yes.
Okay, let's keep going then. All right, precedes a meltdown. All right, the gains created by a melt up are considered unreliable indicators of the market's long term direction. See, isn't that what I just said? Right? You think it's going up in the short term, but that's not an indication of the long term direction. Okay? It's not an indication of the long term direction. Right? Like for example, if this is the current momentum, really, if it's downward, right? And let's say there's a proper reason for this market to be falling. Okay, you get to this level here. All right. You get this level here. Let me just delete this real quick. Okay, so when you finally hit this level, here. Let me all right, come on now, y'all killing me. There we go. All right, when we finally hit this level and we bounce a little bit here, right? Because your expectations are the market is going which way in the short term? Where's the momentum going here? Where's the momentum going? All right? So your expectation is that the market is going down in the short term in this example. So you still believe that means any bounce against it has to be short term. Right? Has to be, right? See the key there. Actually, no, Cecily. It's called the most hated rally. The question in the chat was, is this why it's called the most hated rally? No, it's called the most hated rally is because there's this hilarious assumption out there that a lot of Wall Street managers are missing out on the rally, which is just hilarious. Yeah, they're trying to say that money managers are missing out on the rally. But they're also saying their cash positions are at a near all-time low, so that makes no sense. You see how that makes no sense? See, you got to be very careful with those narratives. Talk to me.
It does, but when I was reading the Gemini response, I was looking at what you've talked about before, those high valuations right now, and I was thinking, is that why they call it that? Because they're
No,
on
yeah,
the sideline with their cash because of this.
no. They assume that, so they're saying most hated they're saying most hated rally by money managers, so by Wall Street, not even by us. They're not talking about the ones that are FOMOing in. They're talking about the ones that should be driving the rally. They're saying they're the ones that most hate it. That's what they're trying to say. It's ridiculous. Let's be honest, right? Now, so again, momentum to the downside. You get a bounce, but in the short term, you have to consider that this is the most likely outcome, right? And the more this happens, the more you get a bounce and a continuation and a bounce and a continuation, the more that happens, okay? The more that happens, the more you have to say to yourself, right, that it's highly likely that that the longer term trend has to be against this. All right. So let's do this. So the more this happens, all right, the longer this goes on. Let's go to the daily. Let's go to the 4-hour chart here. All right. There we go. The longer this goes on here. All right. This right here. Let's move this outside. And I guess we'll do a 2-hour chart to get a better look. So the longer this goes on, right, the the more likely it is that your longer term trend is now going to start to go to the opposite direction. So that's where, notice, just like the normal market, right? We're not breaking the previous high on these rallies, right? This is most recent high here. You're not breaking that on this rally here. So, eventually what ends up happening is you get something like this, boom, that eventually breaks this area right here, right? And that's when okay, I might start to expect up in the shorter term now. But I don't even start betting on down in the long term until we get, through this area here, Then I start betting on on short in the long term. I'm not going to start betting on short in the long term immediately. Like the first time I got this momentum to the downside, I'm not going to start betting on long in the long term immediately. No, all right. I need that boom, boom. Okay, right around here. Now I'm long in the long term. All right, and maybe they got that one last leg lower. Okay, so hopefully that this example helps that particular understanding of like why are we saying long in the short term in a bull market, right? We're talking about a bull market that's already been sustained for quite some time, right? So let's see here. What normally happens to end a melt up? Let's see. Let's see what they say. Let's see what they have to say, right? A melt up in stocks typically ends with a sudden, often severe downturn, commonly referred to as a meltdown or a crash, right? A negative catalyst or shock. Come on, guys. What did I tell you? There it is. Right? A negative catalyst or shock. That's how this ends. Okay? And until you get that negative catalyst or shock, you have to still consider yourself long in the short term, right? And that's only because the rally is going on for so long, right? At this point right here in the rally, where we at? I said this point right here in the rally, right here, as we start to recover. This is not the time to be short in the long term. It's just getting started, right? But once we started to hit maybe like this area right here, right? Breaking out of this area right here, now I'm starting to be short in the long term. Okay? Now we're starting to be short in the long term. Right? So don't get me wrong. I'm as the rally starts, I'm always thinking short term, I'm going up. Short term, I'm going up. Short term, I'm going up, right? But overall, it's not until you get to certain areas where you start saying, and I need to, start thinking short in the long term. Okay? That's what helps you position yourself properly. So let's go back to the Popovich indicator. How do we get here? Because what did I say? I said, look, this is just a daily signal. That's short term. So if all of this is bullish and this turns red in the short term, which way am I supposed to be going in the short term if all of this is green? It's supposed to be going up. So I look for signals where the daily bias goes up in the short term. That's what I look for. Okay? But I don't get me wrong, if I can get in ahead of the daily bias turning red, that's going to be better. So as the market rallies up, out, and hits the far end of all of these key levels, then I can start to say, yep, there we go. That's where I want to take my next short position right there. I want to take my next short position right there. Okay? That's how we got to be thinking. All right? So that whole short and the long-term narrative has to happen at these resistance levels. Let me pause on that. Does that make sense? Rodney? GA, does that make sense?
Yeah, I got you.
So April 7 was a melt. It was the beginning of a rally, Anisha, right? So April 7, let's go back to April 7th, right? This was the beginning of a rally, right? Right here. This first part right here. This is where your rally began. Okay? Boom, 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 boom. Your melt up doesn't really start until around this point here. Your melt up is what's happening at the tail end of a bull market. Okay? So let's do the measurement here. So for those that don't know, you just hold your shift key and just tap near the lows here, and then you get a measurement here. Look at this. So you were already up. Where are we at here? You're already up 20% from these lows by this point right here. All right? Let me get this one because this one's permanent. By this point right here, you were already up 20% from the lows. Let that soak in for a second. By this point right here, you're now up 33% from the lows. So after you start to see that, okay, we're now up 33% from the lows. Let's start with that, right? Where are we now on the year? On the year, we're now up 6% here. So that's so cool. Right? Now here we are. We're up 10% on the year at this point, around that. Well, actually, no, we're more than 10%. Let me go back to the actual beginning of the year. But to the actual beginning of the year, right around here. So you're actually up maybe almost 15% on the year and over 40% probably, right? From that low. You can see your issues here, right? So once you start to find out that we're dealing with extremely high valuations after an unreasonable amount of gains in the market, and the market continues to move higher from that point, Anisha, from that point, you're now in a melt up. All right? One second, guys. All right. So, yes, as I was saying here, right? So again, once you start to see, all right, matter of fact, Anisha, so I want you to think about this, right? I want you to ask yourself, how many months ago did you first see an indication that the Buffett indicator, you remember the Buffett indicator thing? How many months ago did you see that for the first time? That the Buffett indicator was hitting key levels that he warns about.
Oh, yeah.
Right. So let's say it started in August. Right. We can use that as a barometer here, is what I'm saying, right? We use that as a barometer to say the melt up started after that point. See what I'm getting at? All right.
That makes sense.
So that's how you consider what a melt up is. And so when you're in the midst of a melt up, the problem is we are being super irrational at that point as to what we expect out of the market and what those valuations may look like, right? Going forward, so you're either going to get multiple contraction, right, or you're going to get just an all out like spike in earnings. Which one is it going to be? So that becomes the case right there. All right. So let's come back over here now. So again, if I'm in the midst of a melt up, if I'm in the midst of that, like I need a proper catalyst, right? And oftentimes, you know, um, you can find a market like hitting, second, third support to the downside. That usually like signals in some way, shape, or form you might have just found that catalyst, right? And so then all you need from there, like I was saying earlier, where's that lower high at? Where's that? Oh, that at? All right, guys, I'm back. Sorry about that. Um, Obviously, y'all already know if they're acting like that, then that means my wife just got home. They don't know how to act when she get home. They just be acting like they ain't got no sense. All right. Um, yeah. So as we were saying here, right? So, but let's just talk about practical use here. right? Because that's the key. That's the key right now. All right, let's just be practical with the you know, like let's just be practical with the ideas that we're putting into play here. All right. So again, and I'm going to focus on the weekly pivots right now. We're going to keep expanding into these other areas. All right. So weekly pivots. Again, these are based on the previous week's trading, and they tell us where our support and resistance may be at for this particular week. All right. So we have our weekly pivot here, and this is where your main idea comes from. Your main idea comes from here. All right. If I'm trading above this, or if it's green, let's just say if it's green, then I know I'm looking towards the long side. All right. Now that's unless I'm already at my third point of resistance. Okay. In which case, I may need to see a pullback before I go long. If it's red, I'm going to be looking for short positions, right? Going in this direction. That's unless I'm already at my third point of support, in which case I may either be looking for, you know, long positions, or I need a retracement before I actually take the short. Okay, so that could be the case. Thank you. All right, now, okay. On the other note here, okay, if I'm thinking of a short, or let's start with a long. If I'm thinking about a long position here, I would like to see my 8-day trend and my monthly trend going in my favor. Okay, now at the very least, I want to see the 8-day trend in my favor, because right, this is a more short-term to medium-term signal. So I need the other short to medium-term signals in my favor. So that means the weekly pivot, the 8-day trend, the 8-day average, right? The daily bias, right? Those are things I want to see going in my favor. Right. Also, I want to be on the high end of the range, or I want to be coming off of the lowest end of the standard deviation range. Right. So the difference between the weekly pivots and the deviations is that deviations are talking about where we are from the 20-period moving average. You can think of this line going straight down the middle, these two sides, as your 20-day average, right? And the further you go down here, the further away you're getting to the downside from your 20-day average. The further down this side you go, the further away you're getting from your 20-day average to the upside, okay? The monthly S3 and R3 are not a part of the deviations, okay? Those are just there for other purposes, okay? Okay. So now, what we're looking for here, right, is what we're looking for here. Like I said, so let's say I was planning on going long. I either need to be just getting out of my deviation range, right, and you know, just above my high range, first deviation, and I still have some room to go, right? If I'm looking for longs based on the weekly pivot, I can also be looking for the fact that I'm coming off of the lows here, right? So I could be at the 4th standard deviation and working my way back up, okay? So that's what you could be coinciding with this. All right. Now, also at the same time, all right. Also at the same time, like I said, my 8-day trend, my 8-day SMA, at least working in my favor. All right. So these are your practical applications for the weekly pivot. Above it, I'm looking for longs. Below it, I'm looking for shorts, right? Now, again, it's going to be red or green, so I can know immediately what my ideas are, right? So if I was to say, IWM, boom. Type that in. All right, I'm green. Go ahead, Rodney. You had a question? Talk to me.
Yeah, I did. I just have to ask. So the numbers. So I'm looking at the third, second, and first, which is both numbers, right? That you have here for IWS. Then there's a column right next to it, stated with numbers. Are those?
Oh, those numbers you're talking about.
Yeah, yeah. I was saying at some point. I don't want to interrupt you.
No. You got to chime in. I thought you meant one of these numbers here. You meant these numbers.
Yeah, exactly.
Okay.
Assuming they're daily.
Nah. You
calculated.
You ready for this? These are automatically calculated stop losses.
Oh, glad I had it.
Yeah.
Okay.
So let's just say, for example, boom, you just hit your first. See, what these numbers here allow you to do, Rodney, is they allow you to be a risk taker, right? Because every once in a while, we all got to be risk takers, right? Because otherwise, like what are we doing here, right? We can't play the safe game every single moment of our lives here. Sometimes you got to take a risk. Okay, so I got my 8-day trend is up, right? I got my monthly trend. You see how it's italic? That means it's up, but that means it's just breaking out to the upside. Okay. The 8-day trend being like darker green like it is right now means it's approaching the 8-day high. Okay, that's what it means. And when this gets bold, right, that means it's actually broken out of the 8-day. That means it's at a new 8-day high, and it's actually done so in a significant way. All right. But let's just say, right? Actually, give me 2 seconds, guys. All right. So let's just say, Ryan, let's just say we're just breaking out here. And my 8-day trend and my monthly trend are already lit up. They're already green. Let's just say that's the way it's going. So when I hit this number, when I break this number right here, right, I could be watching from the 15-minute chart, the 30-minute chart, the hourly chart, but I want to be somewhere intraday, right? The reason why I want to be somewhere intraday is because I want to see, do we get that first candle close above it, right? And I don't want to wait till all the way to the end of the day. You understand what I'm saying? All right. So boom, let's say I get that first close above there. I can take that trade immediately as soon as it turns bold, or I can have it on my chart, right? 250.67, have it on my chart. As soon as we break that number, I can go long and set my stop loss right here immediately. Does that make sense?
Yeah, now it does because I thought they were daily pivots, but I'm like, they're so close together. But now it makes sense why they're in the same neighborhood. Stop loss.
Right. And so, boom, I set my stop right here, and I look for us to hit this level up here. I'm going up here now. I'm going to the second resistance now.
Drop Beta then as a symbol.
Yeah, that's
I
cool.
want to see what I have a theory about Beta. So they have earnings coming up. They're consolidating. So I'm thinking if they go above the range, which sits around 780, 900, they can go up, and if they go below it in earnings to like 690, they'll probably pay for it.
Gotcha. So they're in a major consolidation. You're saying so this isn't like a recent consolidation. This has been something they've been doing for probably months. Yeah.
Yeah.
Now, you ready for this, Rodney? I can tell that from looking at this. I didn't have to look at the chart.
Yeah, I was wondering how to get that out. So must be looking at that as well. Sure.
No, I can tell from looking at this. So here's the deal. If they were in a recent consolidation, I want everybody to listen to this. If they were in a recent consolidation, then these two numbers right here, right, would both be colorless and lack, right? You see that? So this would be like what we saw. Who did we see recently that didn't have trying to remember, who did we see recently that didn't have was that Tesla recently? Yes, they were like this. Right? So when you said it was consolidating, If that was a recent consolidation, if that was something you were just looking at right now, it'd look like this: blank, blank. This means that Tesla is in a consolidation range right now. This does not mean that they're consolidating. They could have just closed in this range for the first time on Friday. But if they stay in this range, now we're in a consolidation. Especially if I go down to like let's say the hourly chart or the 15-minute chart, the 2-hour chart, then they'll certainly be consolidating intraday. And that could turn into a longer term consolidation status. So that's how I knew. So when you learn to use this the right way, you'll be able to do what I just did. I can tell immediately, just based on what you just said, that okay, he's been watching this consolidate for a while. This isn't just happening. Right? Back to Meta. They're not consolidating around the 20. They're not consolidating around the 8-day key range. And right here on the monthly, this light green with the italic says that they just broke out of a range on the from this monthly perspective. But again, this is not a multi-month level. This is a 1-month level. Right? So that's why I'm saying. So I can tell you saying this is a multi-month consolidation that they're in, yes? Right? So I can see that. Let's go over the Meta real quick. Let's pull them up. See that? So pretty much since July, yeah?
Yep.
Exactly.
Because the catalyst that I'm looking for is earnings. Which is one way.
There you go.
Yeah.
And the way that I just read that, Rodney, is like what I hope for you guys in the future, because that's the true thing of how this thing is built, man. Right? Is once you really learn how to use it, and that's why I'm going to be doing this every Saturday, Rodney. Every Saturday I'm going to be doing this. I don't know if you're going to be able to make it every Saturday, but every Saturday at 1 p.m. Eastern, I'm going to pop on and I'm going to help you guys understand this more and more and more. Okay. So, but today we're talking about this. We're gonna get to the deviations, and how they help. We'll talk more about that next week. But last week I gave you guys the weekly pivots here. So again, on this third support, more likely to go long, right? On this third resistance, more likely to wait for pullbacks. Until I get because without the bearish confirmations, it's a lot harder to short at the third resistance than it is to go long at the third support. Right? I sent you guys a video on that recently as well. Right? What you might do is you might hedge at the third resistance. Right? So let's say I own Meta and they were at the third resistance. I might buy some puts against my position, but nothing that's extremely nothing too big, right? And your second resistance, what you do at your second resistance and your second support depends on other indicators. Everybody with me on that one? What you do at your second support and resistance depends on other indicators, right? The same thing goes for your first support and resistance as well. So if I'm hitting my first resistance, but I'm also hitting 70 on the RSI, okay, I need a cool off period. I'm going to wait for the pullback first and then wait for them to break that first resistance again. And now we're talking business, right? So it depends on where I'm taking that entry from. Here on the daily, look at that, right? So Rodney, this is one of those times right here where maybe I could have went long and just accepted the stop. Right on the weekly, because you see the weekly we closed just outside of that. On the daily chart, we're not quite there yet now. But when you break these levels from a daily perspective, what you want to do is go into maybe like the hourly or the 2-hour at least, and see where you are. So boom, I'm not really oversold here. I mean overbought here. Matter of fact, I'm at a good place. I'm at that 60 level where that's like momentum is at.
Yeah, it feels like the market is holding it in that area.
Right.
It feels like market makers are keeping it in a certain space. No, that's what my thought says. I don't know that true, but definitely a steal.
Right. I got you.
On the chart as well.
I got you. I mean, you got higher lows and higher highs coming in. Right. It's happening. Right. Every change of character to the upside is getting higher.
Yeah.
See that? Right. Every change of character to the downside is getting higher. Right, your last one was down here. You look where you are at now. When you have a change. So this tells you your low, your lower, your lows are getting incrementally higher here. If every time you have to break a change of character, it's happening at a higher point. So this is one of those moments right here, what I was talking about. So I'd have probably said, okay, cool, around this level right here, I'll go ahead and take the position, right? I'll go ahead and take the position, and then I'll look at this as a as a stop out. Now, what happens when like it is right now? You're already well beyond this level. I'm already at the second point of resistance, pretty much, right? You see that? I'm right here now. So guess what? I have my exit short right here now. That I can exit long. I meant to say right here now, right? In which you kind of pull back towards on Friday. Matter of fact, hold on, wait 1 second here. I'm sorry. This was supposed to be. Let me see. Supposed to be a half there and the half. That's what it was supposed to be. It's supposed to be a half and a half. So it'd be 736.27 is what it would be. Actually, yeah, it's supposed to be a half and a half. All right, there we go. So now, either way, so you have somewhere between 733.90 and 736.27. So there's, these are the two options you have for stopping out of this trade. If you had took it, you see it right here. These are your two options now: the exit long, or the exit long, or the right. That's the stop for the second resistance. Okay, because look at what levels you are. You hit 742.40. All right, so once you broke this level here, boom, this became your stop loss now. All right, I break above this is my stop. I break above this is my stop now. All right, or like I said, I can always use this level right here. All right.
Got it.
So, and these are stop losses that can be used to the T. They can be used to the T, man. All right. Once you've already established that level, and I'm gonna have these take profit levels that I'm working on. I'm working on this particular portion of the spreadsheet right now. This is going to be for shorter term trading, of course. All right. So short term swings and day trades. Right. That's what this is going to be for. It's going to be your targets. I'm going to have 3 targets here. I'm going to have a third one here. Right. Target 1, 2, and 3. Eventually. So you see 741.85 was your target. Right. And you hit what? You hit 742.40. All right. So you got just above this by about 60 cents, pretty much. All right. You never got to your second target though. All right. But where you would have gotten this entry from would have been a really great move. Because your entries are going to come from here a lot of times, right? Your bullish and your bearish key levels. So let's just assume this was your level on that time. So 739.38 to 741.85. So that's a $2 and some change move on a day trade. We both know that's actually pretty decent, right? Yeah. Because pretty much, especially if you're at the money, multiple contracts, you know what happens there, right? You're gonna work out really well. As a matter of fact, that's what $2 and like 60 something cents. Yeah, that's you'd have ate really well off of that one, right? But your actual entry would have been lower than this because this level moves throughout the day. What you do is you mark wherever it's at after the first 15 minutes, the first 30 minutes, or the first hour, whichever one you mark. So for example, let's go back to yesterday. So after the first hour, right, you'd have pretty much marked it somewhere. I mean, this seemed like a pretty range bound day though, like you said though. So actually, you probably would have been around that same area, which would, again still would have been a good look. So it would have been a good look. All right, let me see here. Huh. Ah, nice. There's a new feature on Twitch that somebody just sent over. It says stream rewind. It says as a channel subscriber, you can now pause and rewind this stream to catch up. Nice stuff. It's really dope. All right. Appreciate that, Saint. Okay. So now, from the pivot point perspective, let's focus on these pivot points real quick. Does anybody have any questions about the pivot points in specific? All right, and I'm probably gonna stay for another like 30 minutes anyway. Talk about some more stuff here. Any questions in specific about the pivot points? Okay, so let me just recap one more time anyway. All right, if I am above or this is green, I'm bullish. I'm looking for bullish action. So I'm either looking for us to pull back after. So let's say we break this down. I'm either looking for a pullback that I can buy, or I'm buying the breakout. Right. When I'm above the weekly pivot, my bias is bullish. Right. And by the time I get above the first resistance, my trend is likely bullish. Those are the key things that you want to look at. Right. And this goes from a weekly perspective, right? So 713 to 728, you can see how in the short term that's definitely going to likely be a lot of highs and lows coming in there, right? So that's what I'm really talking about there. Now, if I'm below this, then my trend is bearish, right? Or my bias is bearish. By the time I hit my first support, my trend is likely bearish at that point. The sooner I hit these levels in the week, the better. Right? If I'm just hitting these levels for the first time late in the week, I might want to take a pause, right, and wait for some sort of a pullback or just, like kind of maybe give myself some time over the weekend, or if I take the trade, I may put a hedge against it, like we talked about when we did our last option session, right? On I think that was Thursday. All right, now this whole thing with it lighting up, that's meant to be a signal that helps you to quickly determine where you're at, right? I'm trying my best to think about who has a bearish one. Let's see. Exxon, I don't know. Let's see. Nope, Exxon's green.
I think Amazon may keep running right now.
Let's check Amazon. Nope. You know what? What's those guys' names? They were up big on I'm gonna tell you right now. Beyond Meat.
I was just thinking that when you said
Those guys, they were up big. Now look at them, right? Boom. Nope. So even though they pulled to the downside, they still closed above their weekly. You see that? They still closed above their weekly pivot. That's how much they were up. That's crazy, right? Okay. Huh. Who else? Who else? Who else? Who else? Mm-mm-mm.
Disney.
Okay, let's check Disney. No. Was anybody bearish last week? I know somebody was. I know. I'm just joking, but Eli Lilly,
What about Roku?
Roku. Let's see Roku. No. Eli Lilly. No. All right now.
Try Nike.
No. But look at the monthly though. Look at the monthly. Look at the monthly. Right. So this is what I was talking about before when I said, look, the least you would look for is right here, but you're consolidating on this end. Right. You're consolidating right here. You know. So this is a mixed signal on Nike. So I wouldn't take this trade at all. So I pulled up Nike right now. This one is a no. This one is an absolute no. Right.
So
Yeah.
I had a question. So if I were gonna day trade using this system, I'm looking at the weekly pivot, then I'm looking at where price is, seeing if it's below or above the weekly pivot. And then I'm thinking whatever the first resistance point is, I'm gonna wait for first resistance or support point is based on which way this is going. Wait for the stop to hit that number, and then that's when I'm gonna enter. Put the stop loss in, looking for it to continue on to the support level of the second resistance or support level, whichever way I'm going.
Gotcha.
That could be a strategy that I can employ using this particular platform.
Actually, yes, but you would do that from a swing perspective, not a day trading perspective.
Got you. Okay.
Okay.
Right.
So yes, but everything you just said, yes, but don't think of it as a day trade.
Right. So I'm looking at it on a week. This is giving me a weekly pivot.
Right.
So I'm looking at a call that'll last me, like I got what you said.
Right.
Contract 2 weeks, 3 weeks out.
Right. Exactly. Now, by the way, that's why I said if we're already late in the week, right? That's why I said I'd be a little cautious if we're just hitting those levels late in the week. So I might either hedge against it, or I might consider, holding for a pullback the next week to buy. You might consider that, right? Now, watch this. Here's where you're day trading from. Here's where you're day trading from. You're day trading from these levels here, right? So you got your daily bias right here, right? All right, your daily bias is right here. Then when you break your bearish key level, when this gets broken to the downside, then I go short there, for example, right? Now, of course, I would like for my weekly pivot to be red as well, obviously, right? So in this particular case, right, I spare myself this, right? And I mean, but you look at all the mixed signals. Look at the mixed signals, right? Right? We're bearish here, but we're bullish here, but we're bearish here, but we're bullish here, but we're bearish here. Right? So now look at the whole thing, right? From this perspective. We closed at 69.11. What was the bearish key level? 69.10. So it's clearly trying to cling because you're still on the bullish side. You see? This is your problem right here. It's your problem right here. So, I would actually be looking for a bounce near 69.10 to take back to the upside in the medium term here. You see what I'm getting at?
Yeah, or you can just wait for all the colors to be the same.
Exactly.
That would probably be the best way to go about it.
Right, exactly. Well, see right here? So this, and this would now be confirming the same thing. Because once I bounce off of this, the first level I'm going to hit is what? Is right here and right here. Right? So I'm going to get 1, 2, 3, 4 bullish signals out of that one move, just because I waited for a bounce. Right? Now I'm taking a short-term swing. I don't have to have this. It would be great to have this, right? But this would mean that I'm possibly going towards a shift in this. And by the way, this is more likely exactly what I'm going to see. This is going to go blank. When it bounces from here, this is going to go blank. I can promise you that. All right, because I already know what it's going to do. All right, it's going to look like this pretty much. Right? But now, either way, I wouldn't take the short. Like either way, like right out the gate, I wouldn't take a trade here immediately. Either way, but what I would look for 99.9% of the time is a bounce, and the reason is why? Because I'm still above my weekly pivot. Okay. Let's go ahead and let's keep looking though. Let's see if we can find somebody that's bearish.
Can we try Academy Sports?
What's the symbol?
Yeah.
AC.
No, ASO.
ASO.
Okay.
Bingo! There it is. Okay, so look at this now. You see what just happened there? This is what I'm talking about. The visual cues is what I'm talking about. All right, the visual cues. So boom, I pull up Amazon, for example. Boom, visual cue says bullish. See the visual cues? So I'm going to start immediately thinking about a bullish setup. I pull up Academy Sports. What do the visual cues tell me? Right out the gate. Oh, no. No. That's what the visual cues tell me. Tell me we're bearish. And I start looking for bearish setups. Okay? Now, we're already at the second point of support. Right? But we're just slightly below it. Right? The question is, are we already oversold or not? Look at my RSI, right? So my relative volume is right here, 0.96. So this tells me that we can be possibly getting a bounce, right? Because my relative volume right here, my relative volume is below 1, which means it wasn't a very powerful day to the downside, Cecily, right? So I may look for a bounce first.
Right.
So remember, when we're looking at stocks, you have your RSI and your relative volume here. When we're looking at stocks, okay. When we're looking at an ETF like the QQQ, it's going to be relative volume here and actual volume here. Okay, so you want to keep that in mind. So my RSI is at 39. So yeah, I'm probably gonna let's see if I get a bounce first, and let's see if we stay below 50 on the RSI, all that good stuff, Let's see what that bounce looks like, and let's see if we stay below 50. And then when we start to pull back, to the downside again, boom, I'm in there. I'm taking the trade. All right. And again, like I said, we're already here. We're already at the second. Now, don't get me wrong. There's a lot of momentum here. So being that I already have the momentum, what could I do? Rodney, you just said it earlier. What could I do? Boom, I take the trade on that momentum. I set my stop loss right here. Keep it simple. That's it. We're done. So it depends on the type of trader you are. If you're a more aggressive trader, you just take the momentum trade right now. Right now. Just take it. Boom, I'm in there. My stop loss is right here. Okay. Once I get beyond this point by a certain measure, my stop loss is right here. Okay. But I need to push away from this level a little bit before I start using this stop loss right here. All right. Does everybody understand that one? But again, but my thing is, look at the weekly pivot. Your eyes should be drawn here first. The minute you type in a stock, let your eyes come right here first. And then see if everything else agrees with it. Let me check the Twitch, see if there's any questions over there. Okay, no questions over there on Twitch. Okay, cool. All right, let your eyes be drawn here first, right out the gate. So, give me another random stock, guys. Give me another random stock. Call a name. Call a name. Call a name.
Comcast.
Comcast. Boom. See that? My eyes drawn here immediately. I'm bearish. Look at this. I'm hitting a 20-day. So now let's see what else is confirming it. I'm bearish here. I'm hitting 20-day lows. I'm hitting 20-day lows. You see it, right? I am just breaking out of the low range. Right? I'm just getting outside of this low range. See that? Just getting there. And I'm bearish on all counts over here. Now, let me explain something to you guys about these two right here, so that way we're clear about this. Do you see how bearish Comcast is? Y'all can see that. It's pretty clear, right? Look at how bearish they are. Let me explain these two things here for you. Once you see something this bearish, in order for it to truly get back on the bullish side, it needs to break this level and this level to the upside. That is the only way to break what we perceive now as the bearish 8-day and monthly trend. Does everybody understand those? Let me make sure y'all get that one. Okay. These are like triggers that stick. So even when these are not lit up anymore, if the last thing I did was hit these key levels here, if that's the last thing I did, then that's what matters. If that's the last thing I did, then that's what matters. Okay? If the last thing they did was hit a bullish key level to the upside, and this weekly pivot is now red, I don't just sell immediately. And I need them to at least hit the 8-day trend. So this is where I said you got to look for the medium term. At least hit the 8-day trend. I can day trade it to the downside, but I'm not going to swing trade it to the downside, because this could be temporary. So so the things that you're currently looking at, let them match. So it's great to find stocks in this particular state where I know for a fact the last thing they did was hit the bearish key levels to the downside on the 8-day and the monthly. I know that for a fact. It's the last thing they did, because here they are. Okay? So when they start to bounce, I'm looking to sell the rallies, sell the rips, as they say. So I'm going to look for them to hit resistance to the upside, hit their head on the resistance, and start to drop again. Here we go. Relative volume, only at 0.75. Look at the RSI. All right. So this low volume coincides with a low point on the RSI. So I might get a bounce first. Okay, I might get a bounce first. Okay, cool. If I get a bounce, let's say next week I bounce. Let's say I bounce all the way to the first resistance. No problem. All right, no problem. All right. That means I'm going to be clicking this level right here. So it's going to be back to the upside. So in the short term, that means I can actually take a little short-term bounce to the upside here. Does that make sense? All right, go ahead, Rodney.
I'm just saying, it says benchmark QQQ. Why is that there?
Okay.
If we're looking at Comcast, I don't know. I just want to understand that.
This is a benchmark. So your baseline, your pulse, and your uptick, these are called relative strength measures. It's relative strength. So the uptick, the pulse, and the baselines let you know whether or not the stock is strengthening or weakening versus the market. And your benchmark is the market that you choose. I can choose the S&P, the NASDAQ, or the Dow Jones. Right now I have the NASDAQ. That's my benchmark.
Okay, I get it. Yeah.
Right? Because, yeah, without this, so for example, how is Comcast doing versus Warner Brothers? Voila. Speaking of Warner Brothers, see that? How's it doing versus Netflix? Ooh, look at that pulse. See, that pulse has turned green, huh? So the uptick is a day over day. The pulse is a week over week. So this means that Netflix had a worse week against Comcast than it did in the prior week. Okay? That's what that means. Right? I could just do communication as a whole, XLC, the whole communication sector. Yeah, it's not a good look. So that means Netflix probably at least has a pulse in the negative. Let's find out. Boom. How did I know that? See how I knew that? Notice I only mentioned the pulse. I didn't mention the baseline because I know for a fact that over the longer term, Netflix has outperformed the communication sector. But if Netflix has a negative pulse against Comcast, it has to have a negative pulse against the communication sector. All right? Now, when this pulse turns green, Rodney, we say they're finding a pulse. That's what we say. They're finding a pulse. All right, that's why it's called a pulse. All right, we're looking for this to turn green in reality when we're in bull markets. Okay? Now, on a normal basis, I use Dow Jones, by the way. That's my base.
Right, I get you. So whatever that the oil market is trading in, you're comparing the trend to ticker to the overall market.
Right. So and that's something I could do. And if you notice, it didn't warn me. You notice it didn't warn me about changing this because this is meant to be changed. This you can change this anytime you want. Notice if I try to change this, oops, they're like, hold up. If I change this, no warnings because you're supposed to change this. Right now, for the most part, you're supposed to just keep SPY, QQQ, or DIA there for the most part. Okay, because that's the broader market. But if I want to say, you know what? No, I want to know how. Here we go, Exxon. Okay, cool. We know Exxon's weak against the market, but how are they against the energy sector? Also weak. You see? So who is strong in the energy sectors? Watch what I'm about to do. It's crazy, guys. Watch it now. Let's go Chevron. Ooh, Chevron found a pulse last week. Boom. I may go long Chevron if I think oil is going to go up. Right? Because Chevron clearly has an edge on the energy sector right now. See what I just did there? All right? Valero. Nope. Oxy. I'm sorry, hold on. I'm changing the wrong things. My bad. I'm going to change Valero up here. Valero. No, but look at this though. It had a weaker last week, but for this 50-day baseline, it's been hitting in the medium term. You see that? So Valero's a medium term winner. And look at it, it's up here. All right, okay. Oxy. We said Oxy. Nope, not Oxy. Now the 8-day trend is up. That's pretty cool. That's dope. All right. So if we got a signal to the upside, next week sometime, we know the last thing they did, right, was hit this medium term. So this is more like your short to medium term. This is more your medium to long term. Right? So I may have some medium term upside here if we can break out on Monday, let's say, for example. All right, that's kind of how you're looking at it. and you're targeting towards this point, going towards this point. Anyways, let's pull this back. Put back the Dow Jones.
You kind of broke that down in the new video you posted.
Yeah, I did break it down a little bit in the new one,
Okay.
but these recent like changes I was making, I said, you know what, I got to think of something different, and that's where I came up with the idea to do these sessions here. Because like I'm still gonna do those video portions, but once I feel like people are more caught up, and then also those videos are just going to be like uploads, like to the channel itself. So if you notice, I changed the channel from the watch list to the actual channel. Notice I changed it here, going straight to the channel. So in the future, when you go over to the channel, if there's a new video up, it'll be featured as the channel trailer, and I'm going to have that cycling. So you could always, whatever the latest video is, it's always going to be there, or you can just catch the rest of the content. All right, see what I'm saying?
Yeah, I got you.
So that's what I'm gonna replace the URL with this title. But okay, I see y'all. I see what y'all did there. Okay, the equity channel, YouTube. Okay, my bad. They trying to grow up, huh? I've been seeing that there the whole time, and I didn't realize that they was like really trying to prompt me to do that. All right, so like I said, guys, we're gonna keep talking pivot points for the next, into next week, and then but next week we're also going to talk a little bit more about the standard deviations, right? Because what we need to do is we need to really grasp the concept of the pivot points. Right? You got to grasp the concept of the pivot points, and then that's going to help you really just kind of like piece things together, right? Like I said, your first eyeball should go right here. Boom. Okay, I'm bullish. Now I come over here and I say, okay, not only am I bullish, but I'm hitting my 8-day trends here and here. Now I might go over to the chart. Say, okay, let me check SPY real quick. Okay, boom, right? We're breaking down out of this. Right, we're breaking down out of this right here. Right? So now what am I doing? I've talked about it several times today. So now what am I doing? I'm bullish here. My last hit was on the bullish key levels over here. Right? But when I check the chart, I had just hit 70 on the RSI, and now I'm pulling back a little bit on the hourly chart. So what am I going to do? What's my action going to be based on that? And what am I looking for? Y'all tell me. Let me see if y'all got this down pat.
Shorts.
We're not.
Why?
So when this is, go ahead. No, talk to me.
It hit 70. It hit 70 on the RSI. It's below the current price. Oh wow, the current price is above the weekly pivot.
Okay, there you go.
So it still has more. It's in an uptrend.
So you want to consider it. So remember that momentum we was talking about?
Yeah.
Just consider that the momentum is still higher, even though we hit 7 on the RSI.
It's a little pullback.
Right. So what do I do? So, first of all, before you even answer that question, Rodney, I love the fact that you just boom, right there. What we talked about today just clicked. Love it, right? You realize, wait, but it's still above that weekly pivot, right? So now what? So talk to me. So what should my action be?
See if it hits that 679 resistance level, because this is between it's past the 672 and it's approaching 679.
Okay.
So I would wait to see if price expands through that level and then look for it to push from there.
Okay. Now, here's the deal. Let me give you an alternative to that. right? Here's an alternative to that. So now that's cool to wait till it hits this, and then you just take the short, and then you boom, your stop is here, right? Pretty much what you're saying, right?
Yeah, yeah.
Because you're just a couple bucks away. So if I don't get that, right, then I'm looking for it to find support either here or here on the pullback. Right? You see what I'm getting at now? Right?
Mhm.
So now here's the deal. If it hits, let's say it hits this and bounces, boom, then I'm long here. My stop is here. Yeah. So I'm getting that because it's going to bounce off of this. So if it hits 672 and starts to bounce, I'm long here. My stop is here, or where else? Here.
I see
672.
what you're saying. Since it's at a 70, it's likely to give you a retracement, and you're looking for it to come down to at least the first resistance.
Bingo.
And then from there, since it's still bullish, it can still hit that resistance level and then bounce off of there. Okay,
Right.
I know what you're saying.
And then this becomes your first target instead of your entry.
Mhm.
And that's a beautiful look. Look at the distance between. That's beautiful.
Right.
That's probably at least an $8 move. All right. But watch this though. But well, let me say this first. And this is your confirmation that you need to stick with that idea. Because the last thing you did was hit what? Your bullish key levels. We're not talking about these two being green. We're talking about these two being hit. If the last thing you did was hit these two right here, then you go with all bullish ideas until you hit these two right here. If I never hit these two levels to the downside, nothing's changed. I want to keep looking. I want to keep looking for the market to find support on the pullback. Yeah. Now watch this though. You see the 672.02. You said we're gonna look for the pullback in this direction, right? Watch this. Look at where that happens to take us. 672.02. Right to the closing of the gap. Right there to close the gap. See that now? So boom. So we come down here. Boom. We close the gap. Shoot back up. Look at how far down it has to go in order to hit this level or this level. 664 to 657. Right? Closing the gap. I mean, so it has to shoot far past this gap, all the way down to here, in order to change to a bearish signal. In which case, then we'll start to look for lower highs and look for it to find, right, resistance, right, at these levels here. Right, look for so let's say so because you see right here 657, you'll be close to this area right here, right? You'll be close to it, but not quite hitting it. So then at that point, I would say, okay, let me see if the weekly pivot becomes resistance. And then boom, if it does, then I'll trade it back to the downside and I'll do it. Boom, right? And now I'll probably just be taking profit right here, set my new stop loss here, boom, bada bing. So that's why it's so important to understand this area right here. This, like, don't get me wrong, these are your signals overall. But this is your interpretation power. This is your interpretive power. That's where your interpretation comes from. All right? Your interpretation comes from here, 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 right? All this stuff here, right? And so, like I get my signals here. So again, if it just shot straight through that level, just shot straight through it, here we got a problem. And by the way, this is your bias for the 8-day trend right here. 667.79. This is always going to be your bias for the 8-day trend. This little small number right here. So when it pulls back to close this gap, you do not want it to fall below 667.20. You don't want that. And it's right next to this pivot level, this 50% retracement level anyway. So you might as well just shift your focus to that level right here. Boom. So when it pulls back to do this, I don't want to see it breaking this level here. Because that means the weekly bias, the 8-day bias, I meant to say, just became bearish. So now I'm going to look for us to push lower. And as soon as we hit push lower, boom, and we bounce from there, I am no longer looking for buying the bounce. We're no longer looking for that. We're looking for selling the. selling the next rally. So the minute we broke this level here, I started saying, let's see if we hit this level here. So that way we can do this. Boom, sold. Gone, out of there. Okay. So that becomes all your keys there, right here. All right. And if you guys can learn to use this really well, everything's going to be good. You're going to notice, like, if you watch me on the stream, you'll notice I focus on these a lot. These two right here a lot, and these two right here a lot. But that's because I already this should be quick. This right here should be quick. Because once you see it, you can't unsee it. It's there. I'm bullish. I'm at the first point of resistance. I'm above the first point of resistance. I'm just below the second resistance. All right. I look at my chart. Market looks like it could potentially pull back, close the gap. Okay, cool. When it closes that gap, I'm watching this right here. That's it. All right, because this I already know. This again, these signals are already there. I made them, and this is why I redesigned it, Rodney. So this is where a lot of those redesigns come from, right? And this is probably the best redesign I've had of this particular area right here. Because here's the deal. I redesigned this to make it so that way you only have to think about this once. This right here. If this is the last thing I did, we go with the last action on the bullish. So these are your bullish and bearish key levels. You have your bullish key here, bearish key here.
So basically,
Yeah.
if price hits that 674.29, you have strong confidence that it's going to hit the second resistance level of 679.06.
You can say it that way as well, yes. Or what I'm saying is, if it hits this 674.29, I have strong confidence of buying at support.
Right. Okay.
Right, which then leads to this area here, right? Because if it finds support here, then there's a great chance it's going here. So once this level got hit right here, oh yeah, okay, cool, boom. Now you hit this level right here, and then you also broke above this level here. And went even beyond that to get, almost here. All right. So on this pullback, you have, right, your bullish key level here. So again, same as this says bearish key and bullish key. These are your bearish and bullish keys so this is daily bullish and bearish keys right here. These are daily, right? The bullish key and bearish key, these are daily numbers. These exits, short and longs. Now these are designed for an exit out of any trade. Doesn't matter the trade. So if I'm in a day trade, it's an exit out of that, right? If I'm in a swing trade, it's an exit out of that. This is just a one times the ATR period. You know what I mean? So this always gets you out of the trade. At first I had it as as a half, but it just wasn't, it wasn't enough, if you get what I'm saying. We needed a little bit more than that. All right. So, all right. So that's it for this week. Y'all pick up on some new things this week that y'all can take into the next week? Just want to make sure. Yes? Okay.
Sure.
No problem. So that's going to be the goal. The goal is going to be like each week to get y'all to pick up on something new that y'all can take in until y'all start to master using this tool. And the biggest thing is just you have to learn to simplify your thoughts when using this thing, right? Because it may look big and bad, but it's AKA how they say Cecily, it's a baby pip. You know what I mean? It may look big and bad, but it's a baby pip. All right, it ain't hurting nobody. All right. I can assure you everything on here is the mildest. Two things I'm gonna leave you guys with. These are just reminders. One, let me remind you that when this level is bold, we are still looking for a big move to come. Okay, when this level is bold, we are still looking for a big move to come. So we still haven't gotten that big move yet it's still bold. It's been bold for quite some time. We don't know which direction that big move is going to come. But when it does, it's probably going to be humongous. And I don't know if I believe it's going to be to the upside. I don't even know if I believe that. Right? I saw somebody on Twitter earlier, Cecily, say, "Prepare for a blow off top." Okay. Right. We're not talking about a specific stock in the moment. We're talking about SPY right now, just the market in general, Judy. So just the SPY in general. So we're preparing for a big move here, right? Just so this means like we're preparing for a big move in the market. So what did we talk about earlier? Could a negative catalyst or shock come in that big move be to the downside? You saw how quickly the market just shot, to 27, right? And then this level right here speaks to volatility contraction or expansion, right? So typically this number is going to look like this number right here, just normal. It's not going to be red. So it'll look just normal, right? But when it turns red, that means your 8-day ATR is now higher than your 20-day ATR. That's what it means. Okay, so just so we're clear about that, it means your 8-day ATR is now higher than your 20-day ATR, which means the past 8 days has been more volatile than the previous 20 days. That's what this means when it's red. Does everybody understand that before? Because I'm going to answer Judy's question in the chat, but I want to make sure y'all understand that first. Whenever this number is red, it means the past 8 days has been more volatile than the past 20. So that means, AKA, your monthly trend is more volatile than it means your 8-day trend is more volatile than your monthly trend. When it starts to die down, this number will start to go down. It'll start to shrink, all right? And then it'll start being red. It'll just look like this, okay? So we have two levels here that suggest we're dealing with higher volatility, but still waiting on a breakout, all right? So now, levels that we're looking at, just in general, levels that we're looking at going into next week. 672 support on SPY. Now maybe try to be here on Monday morning if you can, because these weekly numbers are likely to change a little bit. All right, because we have to update them for last week. I'm trading on Robinhood, but I'm charting on TradingView. All right, so when I look at charts, I'm usually on TradingView. All right, so but yeah, we're looking at this 672 support level for now, Judy. 672 support. And we're looking for that area. So let's say the area between 670 to 672. We're looking for that to hold. So basically, as we close the gap, we're looking for a bounce after the gap is closed. And once that gap close happens and we get that bounce, we're looking to trade it back to the upside. I start my pre-market at 8:30 on Monday. And then I start a streaming session from there at around 9:30, right, Eastern. So we'll be here. We'll be here for a full hour in the pre-market, and by that time we'll probably have the new levels and stuff like that. Yeah, we're just waiting for the data to update. Right, because the data updates as the week opens. All right. So when the week opens, they're going to give us all last week's data, and it's going to shift our levels, and then we'll see what our new levels look like. All right. Just make sure you're in the Telegram. I put the Telegram link in the chat here. I see a few people like those comics, huh? Yeah. I finally got them to say it right, Cecily. Judy, I put the Telegram link in the chat there. So, let's make sure you join, make sure you join the Telegram, and, we'll always be, we'll always, like, whenever we come in the morning, we'll post a link to the room. So that way that'll be like your alert that we've started. So we do, in the mornings, we go from 8:30 to 11:30 in the mornings. And then around 11:30 or noon, we'll close out. And then we'll come back for power hour to see if there's any signals there for us, right? Did the market turn out to give a signal that we can take into the next day or beyond that? So we look for the power hour there. And we have power hour every day except for Friday. No power hours on Fridays. All right. I'm gonna post a schedule in the chat. I'll try to post it by tomorrow, so that everybody can have a schedule to look forward to. All right. Other than that, guys, I'm looking forward to next week, and I'm looking forward to hearing, let me know if any of these things work out for you guys next week and how they worked out. In general, these are great ways to go about it. You either getting in on a breakout, or you're looking for a retest. Those types of things. So you have to just really get really adept at determining when do I want the breakout and when do I want to wait for the retest or the pullback, right? And I'll give you guys a hint on that, right? And the hint here, right, is that you whenever your breakout is coming from a lower point on the relative strength index, then I'm willing to take that, especially if we're just breaking back above 50 or 60 as it's happening. I'm willing to take those. Always check your shorter time frame relative strength versus your longer term relative strength. So I'm gonna go to the chart. Let me show you the chart real quick. By the way, shout out to Valentine for the follow. All right, shout out to Valentine for the follow. I don't know why it didn't pop up on the screen, but thankfully I got an email, so I can give you a shout out. All right. So let's go to the charts here and take a look what I'm talking about. So you see right here on the shorter time frame, right? This isn't that bad on the RSI for the daily, right? See that? Look at the daily, not that bad, right? When I go to the 4 hour, right, we're at 62.51. When I go to the 2 hour, we're at 63.91. When I go to the 1 hour, right, we're at 66, and we actually broke over 70. When I go to the 30-minute, right, we're at 63.6, and we actually hit almost 75. When I go to the 15-minute, look at that. See how much more we've broken down in the 15-minute? We're at 50, and we hit almost 80. Okay? So I would have liked to wait for a pullback anyway, but at the same time, you have to consider how good, I like solid pullbacks, right? So just so that we're clear on this, solid pullbacks create strong demand zones. Okay? Shallow pullbacks create weak demand zones. You eventually broke this level, didn't you? Did y'all know that? Yeah, did you know that? Let that soak in. I'm trying to hook you up here. All right, listen to that again. All right. Jay Thorpe, shout out for the follow. Jay Thorpe, shout out for the follow.
What, Duran,
Yes, sir.
what defines a weak or a strong pullback?
Right. So let's talk about that, right? So when we talk about weak pullbacks, they look more like consolidations. Right? See that? You got really nothing, right? They look more like a pause as opposed to, right, an actual structural shift that actually, leads to a considerable retracement, right? So you would say that a reasonable way to look at a strong pullback is having retraced at least 1/3 of the move. Okay, having retraced at least 1/3 of the move. That would be considered reasonable, right? So you see right here, this is at least half that move right here. All right, see this? They retraced pretty much the whole move right here before eventually, right, pulling back to the upside. Okay. So these become areas that are, and if you look across here, see right there, because this was a pretty decent pullback, right? Boom. Now, eventually, when you eventually broke out from here, it came from this same area that started the first pullback, right? Boom, pull back here, fell kind of below that, and then you eventually broke out from the same area, right? This area right here as well, that the final portion of this pullback. So this area right here will end up becoming potentially some strong support in the future. Okay. Matter of fact, look right here. Actually, so although this was a gap, it's still a pullback, right? It's still a pullback off of a move higher, nonetheless. And so look right here. Eventually, that area that you pulled back to ended up becoming great support for the market, and it moves higher from there. Right. So weak pullbacks create weak support. Right. Strong pullbacks create strong support. That's how you would look at that. All right. But we're talking about pullbacks that lead to moves higher and moves lower, right? That's what we're talking about. So, for example, when you pushed out from here to this area, right, and you broke down from there, notice when you bounce back up, you kind of stalled here first before you eventually bounce back to the upside from here, right? So that's kind of what we're talking about. So any area that led to a bigger move tends to create bigger support and resistance levels. Okay. So so you got to be asking yourself, am I, so before I took this trade, would I have considered this to be the pullback I was looking for? No. This is not the pullback I was looking for. We're not doing it. Because look, again, you have to think about, look at the 15-minute chart, right? You have to think about that a little bit, right? Like I needed to, right? Look at this. I mean, come on. No, we can do better than this. Right? Give me some room to work with. Okay? Give me some room to work with. And then we can talk. So yes. So practice that next week, man. Practice like checking in on, so like, okay, cool. This looks good. I could have took this from right here. That looks good. We probably will be up on Monday, But who's to say we're not going to open higher on Monday and boom, and collapse and just engulf this entire day right here? Who's to say we won't? Right? We don't dictate the things that actually happen in the market, right? Matter of fact, you're at a new high right now, but look at how far you are off from the highest point on the RSI. Should we talk about that? That's a major divergence. It's a huge divergence considering where you were at the, like, so you gotta think about those kind of things. All right, so I need a reasonable pullback, one that I can depend on, but these divergence levels are starting to come in, but you can see the market can push through those. The market can push through them. You're getting these bearish divergence, but at the end of the day, you're still in this bull trend that you have to continue to feed until it stops wanting to eat. Right. So apparently they're not full yet. So every time I see those signals, I go into like the hourly chart, see what that's looking like. Okay, cool. So I didn't hit 70 on the RSI for the daily, but I did for the hourly. Once I see that, I know I need to wait for, I need to check my lower time frames, see what's going on there. Then I see I need to wait. Right. So if I break a new high on this 15-minute chart, I can already tell it's not going to be at this level on the RSI. Not even close. All right. So that's going to be another divergence happening. And so again, I'd rather wait for the gap close. Give me something to really work with, and then we'll go from there. So I need a better pullback. Something strong. All right. So I'll leave you guys with that one, and then so we'll talk on Monday. We'll be doing a pro pivot indicator session every Saturday. If you don't have a version of the pro pivot indicator yet, the link is at the top of the room on Clubhouse, and I'll post it in the Telegram when we're done. In the event you want to grab yourself a little something there. All right. So am I looking for SPY puts? No, I'm not looking for SPY puts. I'm looking for calls because we're bullish, right? So I don't know if you're looking at my screen, but you can see, right, my 8-day trend, my monthly trend is bullish right now. So yes, I'm looking for the pullback, but I'm not looking to sell it to that level. I'm looking to buy when it pulls back to that level, because that's just not enough room for me to want to short. When I want to short, that's going to give me, 3 times the ATR or better. I want big shorts, or at least 2 times the ATR. So whenever I want to go short, I want to be positive that I'm looking at a bearish scenario. So for example, if the market was to break out dramatically to the upside, right? Let's say next week, all of a sudden we do pull back here, but we break out to like, to this level. Yeah, okay, cool. I'll short this level. I'll take a short up here for sure. Give me that short. But and you see right here, I have 687 right here. Yeah, I short this level right here, but I'm not going to short the other levels. I need to get further away from 669. I'm not far enough away from this level right here. All right, just so we're clear on that, guys. So we're talking about being more close to the 4th standard deviation, then we can start talking about shorting. All right. Like I said, that's it for today. I will catch up with you all on Monday. All right. Everybody be blessed. Stay well.
Thank you so much. Later.